Alright, hi guys. So today we will be looking at SPEN and AHUN. So before we get started with the video, I was supposed to put this video out yesterday but got caught up with some work. So because of that it got delayed. I was planning on putting it yesterday night, but then realized that most of you probably wouldn't be able to watch it. So because of that I decided to post it today. So we are one day behind, but hopefully I'll be able to catch up, and I'll start posting a video a day from now on. So hopefully there won't be any further delays. So anyways, yeah, let's get started with SPEN, and we will move on to the other one. So overall, as we always do, we zoom out of the chart. I think this by now already most of you would know. So we look at the overall trend. So we can clearly see that since the May lows, the COVID-19 lows, we have seen a very nice uptrend on SPEN. So overall the trend has been positive, and prices have pretty much gone from around 24 rupees all the way to around 93. So that's a very strong gain, and when we look at the chart, you will realize that SPEN does still have a bit more room to run over the next few weeks or even over the next few months. So that being said, so we know that the overall trend is positive. So now what we do is we obviously look quickly at the moving averages. So for those of you who are new to the channel, we look at the 20, 50 and 200-day moving average. So what you see from the 200-day moving average, like we always say, it differentiates a market between a bull market and a bear market. So if prices are above and the slope is positive or slope is rising, that means that prices are in a bull market. So we are in a primary bull market. Now, however, you can see that the moving averages, which is 20 indicated by the blue line and 50, which is indicated by the red line, is not aligned. So what that says is that prices are currently consolidating within the medium to short term. So short term trend is indicated by the 20 moving average, the medium term trend is indicated by the 50 moving average. So what we see here is that prices are consolidating over the short to medium term. So clearly we can see that since October, so pretty much for the past 2 months, prices have been consolidating around this 77 to 92 range. So now we know few things. We know that the prices are in an overall bull trend. So what that means is that we need to focus our positions on the long side, and most importantly we know that the short term to medium term trend is still uneven, because moving averages are also showing that prices are consolidating. So we need to look for a possible breakout. So now that aside, let's quickly look at possible chart patterns and stuff like that. So I'm pretty sure most of you would have already identified this. So what we see here is pretty much a possible rounded bottom. Okay, so you can clearly see that prices have a nice curve over here, and prices have pretty much rounded over since around this January top. Prices have bottomed out through a rounding bottom. So now we have a confirmed breakout. You can see that prices over here, let me show it to you. So you can see that prices over on this candle closed above the resistance level, and most importantly there was very heavy volume traded on that day. Now if you haven't been watching my videos before, how we confirm a valid breakout is when prices close above a certain resistance level, and most importantly when there is very strong volume to justify the move. So here obviously we see both of them and we have a valid breakout, and obviously what happens then is prices move very strong over the next couple of days. And since then, however, since prices topped at on the 6th of October, prices have been going sideways. So if you had seen this, we see a possible wedge formation over here as well. So you can see it over here. This looks like a possible wedge. So for those of you who don't know what a wedge is, this is what a wedge looks like, and this is a bullish wedge because prices are trending against the overall trend. So you can usually a bullish wedge forms against the overall trend. So the overall trend is positive, so the bullish wedge slopes downwards. Now we are watching obviously for a breakout. Now if you look at today's price action over here, 29th, you can see that prices did close above this resistance line. Let me draw it clearly. Yeah, so prices did close above this resistance level. So is this a valid breakout? Now we do have a minor close, because remember I also said that we can use a percentage filter. So when we say percentage filter, that means we put a certain percentage on the close. So we assume that we only consider it a breakout only if prices close a certain percentage above the resistance line. So assuming that the breakout was roughly around 82.40, we put a percentage filter saying we only consider it a valid breakout if prices close 3% above that level. So 3% of 82.40, you add it to that, and if prices close above that level is only when we confirm a breakout. So as of now, we have a very minor close above the resistance level. In terms of volume, we can see the volume has slightly come up, but not really the volume that we have seen over here. And to be honest, this is the type of volume that I want to see if prices break out above such a level like this. So as of now, we do not have proper breakout confirmation. At least in my opinion, I don't see proper breakout confirmation. So we might see heavy volume coming in if prices break above this 85 level. So if 85 gets broken, we might most likely see some volume coming in. Now the most important thing that you need to understand is that there has been heavy accumulation around this 79 to 80 area. So that clearly becomes a demand zone. So overall, let's quickly look at a price target. So a price target from this rounding bottom is the same way that we measure price targets from our previous videos. We take the height of the pattern, which is roughly at around 80, and we take the lowest point of the pattern, which is roughly at around 49. So 80 minus 49 gives you 31 points, and that you add it to the breakout level, which is at 80. That gives you a price target of roughly around 111 rupees over here. So now that we have a price target in mind, now we obviously need to figure out where our risk level is going to be. So for me, the risk level would be below this level right here, right around here. So below 78 rupees. So if prices are to close below 78, remember I've always said we need to see a close. So we are looking at the time frame. We need to figure out which time frame we are looking at. If it's on the daily, it needs to be a daily close below that certain level. If it's on the weekly, it needs to be a weekly close below that level. So if you look at the weekly chart, and if there's an intraday, if there's a daily penetration below that level, we can't consider it a breakdown or a breakout, because we are looking for weekly confirmation. So as of now, we are looking at the daily chart. So our daily stop is going to be below 78 rupees. So if prices close below 78 rupees on the daily chart, that might most likely be a point where you should probably stop yourself out and wait till there is proper confirmation on the overall trend. So as of now, looking at the price action, we can clearly see the price action is very strong and favoring the buyers. So I see no reason for prices to break below this 78 level. So if price action is strong, we should get volume coming in and we should continue higher. So roughly going through everything that we have said, we know that the overall trend is positive. We know that the short term and the medium term moving averages are signaling consolidation, and we can clearly see it over the past 2 months. We have had sideways action, and thirdly we know that our price target is roughly around 110 to 111 rupees, and our stop level will be on a daily close below 78 rupees. So that also, just to let you guys know, this is just the way I trade. These are just my risk levels. This is what I'm watching for. That does not mean that should be your level. So just because I'm going to stop myself out at 78 doesn't mean you have to. If you want to give more flexibility into your trade, you need to obviously figure out where your risk level is going to be and then trade accordingly. So this is just the way I am trading, and this is not by any means telling you to trade the way I am doing. So always keep that in mind. This is just the way I'm looking at the chart, and this is how I usually do things. So right, we have looked at price tag, we've looked at stop level. So let's quickly move into the monthly chart just to see how the price action is. So looking at this, we can clearly see that there is some heavy resistance around this 93 to 95 level. So it's clearly a very strong level on the monthly chart, and since we are looking at the monthly chart, which is one of the biggest time frames on the chart, that clearly indicates that it is going to be a very strong level to break. So provided SPEN can break that level, our next level of interest is going to be roughly at around 110. Now if you had watched one of my videos before, I explained to you that I like it when my price targets correspond to very strong resistance or longer term time frames. So as of now, we can clearly see that this 110 to 111 area is going to be a very strong level of importance and a level of supply if buyers are to push it to that level. So that is also a price target. So I like it when my price targets correspond to certain levels like that on the chart. So right, so that being said, we know that there are key areas to break. One is this 93 to 95 level, and then we have much stronger resistance around the 110 to 111 area. So yeah, that's about it on the on SPEN. Also, if you want a more flexible stop, your stop can even go below this what's the close, below 76. So you can even have your stop level below 76 if you want to. That is also a very strong support level. So again, like I said, adjust your stop levels according to your risk appetite. So probably you are you're a person who likes more risk. So if you want more risk, then obviously you need to give more flexibility to your trade. Yeah, so that's about it on SPEN. Let's quickly jump into AHUN. Yeah, so let's quickly move into this. Okay, so let's quickly look at the daily chart. So we can see that overall the daily chart is also showing an uptrend on AHUN. Since the COVID-19 lows, we have this very nice trend line going on. Over here we have seen that prices have found support on that area over here. We have seen prices pull back to that area over here, and also roughly around here. So an immediate stop level for you is going to be if prices close below this trend line, because since it's been a major support level for prices since almost for the past 18 months or so, this is going to be an obvious level for buyers to watch out. So if prices have a daily close below this level, that might possibly signal a trend reversal. Now always remember, just because prices penetrate below a certain trend line, that does not say that it is going to be a reversal. Sometimes that might just signal that prices might just go in a more sideways price action before we see a breakout above, a breakout to the upside and prices move higher. So just because prices break below trend line does not mean that it's going to be a trend reversal. It's just a signal that you need to be a bit more cautious, and possibly there might be a trend reversal in sight. So now we have looked at the overall trend. Let's quickly look at the moving averages. So we have the 20, 50 and 200 day. For those of you who don't know, the 20 again shows the short term trend, the 50 shows the medium term trend, and the 200 day shows the long term trend. So as of now, we can clearly see that the 200 day moving average is sloping up and prices are above it. So we are in a primary bull market. However, as of now, just like the previous video, we can see that the 20 and the 50 moving average is not aligned, which means that prices are currently in the short term and the medium term consolidating as of now. So we can see that since prices stopped around this late September, since then for the past roughly 3 months we have seen some tight consolidation in AHUN. So we have looked at multiple things. We know that the primary trend is positive, and the short term and the medium term trend is showing, medium term moving averages are showing that prices are in a consolidation phase. So that being said, let's quickly look at the monthly chart, because that's where I see a nice pattern forming. So let's quickly get rid of this moving. Okay, so right, so this is a pattern that I have not spoken about in my videos because we haven't seen one yet. So we have finally seen one. So this is what you call a bullish right angle broadening wedge, a broadening wedge. So let me just write it down here. Right angled broadening wedge. So this is what you call it. So this is a bullish variation of the right angle broadening wedge. So you can see that why you call it broadening is because you can see that prices, there is one trend line which is horizontal, and the other trend line which is moving away from the other trend line. So that's why we call it a broadening wedge. For those of you that understand, you clearly understand the difference between this and even an ascending triangle. So in an ascending triangle, we have a horizontal line just like this, but we have the lower trend line moving towards the upper trend line. But here we can see that the lower trend line is converging away from the upper trend line, making it a broadening formation. So that's just another sort of chart pattern variation. Okay, so now we have seen clearly that we had a breakout over here on the month of September. So we can see a very strong breakout on the month of September, clearly showing there was heavy volume as well. So that itself shows that we have a confirmed breakout. Now you can clearly see the prices after the breakout have pulled back to test support. So this support level over here, which is at around 35 rupees, is obviously the most important level for buyers to hold. So as long as prices remain above 35, that is a really good sign for the buyers. And most importantly, we can see the volume has been declining as prices threw back to support. That is a good sign, because how we define an uptrend through volume is you want to see volume rise as prices rise and volume decline as prices pull back. So that is what we are seeing here. And most importantly, we know that the key level to watch for is 35 rupees. So now let's quickly explain how to place a stop here. So again, remember I told you that we need to focus on which time frame we are looking at. Now as of now, we are looking at the monthly chart. So how do we know whether prices if prices do break below 35 rupees, can we just say that that is where we stop out? No, because on the monthly chart we need to wait for a monthly close. So if prices close below 35 on the monthly, that is a signal that prices are most likely going to continue lower. If you want an possible early signal that prices are going to go lower, then obviously dig down into the next lower time frame, which is the weekly chart, which might give you an early signal that a possible breakdown is possible on the monthly chart as well. So now that we have looked at the pattern, the same way how we look at price targets, we look at the height of the pattern. So we know that the highest point is at 35, and we know that the lowest point over here is at 12. So we have 23 points over there, and we get a price target of around 58 rupees. So 58 rupees, like I said, roughly corresponds to around this level over here. Now you can clearly see that this area has been a level of interest for buyers and sellers alike. So that's been a level of interest since around 2000, early 2010, for the past 11 years. This has been a level of interest for both the buyers and sellers alike. So now that we have looked at the price target and we know where our stop is going to be, which is below 35, there's another candlestick formation that I want to show you guys. So you can see these 5 candles over here, right? Sorry, 4 candles. Yeah, so this one over here, not this black candle, this white large candle, and then these 3 over here. So usually when we see a very large candle like this, we can identify a support level by figuring out the midpoint of this candlestick body. So if you can't see exactly which candlestick I'm talking about, it's this big one over here. So we take the midpoint of the candlestick body. How we take that is we look at the open and the close. The open is at 30.10, the close is at 43.50. So you find the difference between 43.50 and 30.10, and you get roughly around 13.4 points, and you divide it by 2 to find the middle value of it, and then you get 6.7, and then you minus you can find the midpoint either by minusing it from the close or adding it to the open. So I'll just minus it from the close, and you get roughly around 36.80 rupees. So a possible support level is also going to be this 36.80 level as well. So you know that there's a clear level of demand between this 35 to 36.80 level. So that is also another way of finding support. Another thing that we see here in terms of candlestick pattern is something called the rising 3 methods. So for those of you who didn't get that, it's called the rising 3 methods. So how we define a rising 3 method is simply by this. We see a very large white candlestick or a green candlestick, and then we see 3 smaller candlesticks that usually stops around the midpoint of the candlestick body. So like I said, roughly the close of the third candlestick should be right around above the midpoint of the more important candlestick over here, which is a large candlestick. So what we can see here clearly is that prices did move down to 35, but as of now we can see that prices are going to close above that 3680 level, which is the midpoint of this candlestick. So we have a possible rising 3 methods, and usually what happens is the next month we see a very strong impulse move, just like this candlestick over here. Now that being said, looking at a lot of the other charts, most of the time prices don't have an impulse move. There are times when it does, but more often than not, prices most likely forms a base, more like a rounded base, where prices consolidate above this support level for a while and then start moving higher, and then start moving higher at a stronger pace. So that's usually what I've seen. That being said, there's no guarantee that on January we might see impulse move like what we saw in September, but from looking at most of the candlestick charts and all of it and how textbooks explain it, usually we see an impulse move. That being said, nothing happens the way textbooks explain it. You have to give it a bit more flexibility, and from what I've seen in CSC, more often than not, you see a bit of consolidation before we see a breakout above these highs and we see a very strong move to the upside. So now that we have that aside, another thing that I wanted to explain, put out, just like the previous video that I explained, was that my price target of 58 roughly corresponds towards key resistance level, which is roughly around this 58 to 63 area. So like I said, I like it when that happens. It usually, whenever that happens, usually prices do go to my price target. So again, we need to give more flexibility, so therefore there's no guarantee that it will go to that target. If it doesn't, then obviously you know where stop is, which is below 35 rupees. So yeah, that's about it on AHUN. I think we have pretty much looked at everything that we need to look at. So anyways, if you guys have any questions on this video on both the counters, you can obviously comment below and I'll be happy to answer your questions. So again, just to point it out, the way I trade doesn't have to be the way you trade. Make sure to find your own style. I'm just putting it out so that you guys have a rough idea of what I'm looking at, and then you can develop your own style by reading materials and stuff like that. So yeah, so if this video is helpful, please make sure to like and subscribe. Most importantly, like the video because it helps the channel out, it helps on YouTube algorithm. So if you watch the video, don't fail to press the like button and subscribe to stay updated on my next videos, and also put your thoughts in the comment section on how I can improve my content, and if there's anything else that you guys want me to look at over the next few videos. So thank you guys, thank you for watching, and have yourself a nice day. Thank you.